What's going on YouTube? My name is Zach Hartley and welcome to my channel. In this video, we are going to talk about everything that has to do with technical analysis and price. How to read the price, how to see which way it's moving, and how to use it to determine which stocks to buy and sell. Now, all of the footage you're about to see came from my course, so if you're interested in learning any more about the stock market, how to manage a portfolio, or how to just buy your first stock, definitely check out the links below. And if you get any value from this video, please don't forget to like and subscribe. But without any further ado, let's get right into it. Here we go. What's up everybody, Zach here, and today we are going over technical analysis with a focus on price. So let's get into it. Technical analysis is using charts to make investment decisions. What that means is we are taking the price and the volume data from that trading day, we are putting it onto a chart with the rest of the trading days, and then we are going to extrapolate as much information as we can to make a buy, sell, or hold decision. So what does this look like and how do we get into it? Well, before we start, we need to talk about a couple of definitions. The first two are bull and bear. Now, these are kind of unique terms. You're only going to hear them on Wall Street or CNBC or Bloomberg, but they are extremely common and they're a way of defining and describing the market. So when we talk about a bull, we are talking about the animal, that's what it represents. And when we say it, we're talking about a bullish market or a bull market. And what that means is that the market is going up. We're seeing a trend line from low value to high value, and we're seeing it accelerate over time. When we talk about bear markets or bearish markets, we mean that the market is going down. It means we're losing value. We're going into a recession. We're going into a depression. Something bad is happening, and the value of that stock or those stocks are driving down. Now, the only reason and the only way that I could do some research on this, I typed it into Google to figure out why it's called the bull and the bear. The only information I could find is that the bulls thrust their horns up and the bears swipe their paws down. Kind of unique and interesting, but it goes back a long ways and everybody uses these terms, and it's also the reason that there's a bull on Wall Street. So that is why that there's a giant bull sitting in the middle of Wall Street. It is there to represent hopefully a market going up over the long term, and so far it has. We're definitely in a little rough spot right now with COVID-19, but that's okay. That's why there's a bull in New York City, and so when you hear somebody say it's a bullish market, it's a bull market, we're doing well, that's a good thing. If somebody ever says anything about a bear, it's definitely a bad thing when you're talking about stocks. So how do we look at price on a chart? This is a really good point right here. So, because it's different. I took a screenshot of my Tesla shares on my cell phone the other day. Over a 1 month time period, the price was $454, and this is what it looks like. We can see the price chart on the right-hand side here, 786 down to 455, and this red line is representative of the price over that 1 month time period. Now, how do they plot out this red line throughout that period? Well, they take the closing price at the end of each day, and then they take the closing price at the next day, and they just draw a line in between them. They draw a line to the next one, and that's how you get this basically spiky line that goes all the way through Tesla for the last month. That is the price action over the last month. Now, this is really good, but for instance, if we started here and the price went way up and way down and then closed right here, you would never be able to see that kind of information on this chart. So stock traders and investment guys have developed a little bit of a different system, and it's called the candlestick or the real body and shadow method. And it looks like this. So it is this funny looking thing on the right hand side here, and every candlestick is what I'm going to call these. Every candlestick represents one period. So if you were looking at a 30-day period, kind of like what we just did at Tesla, you would see 30 of these candles. And instead of it just being one line, you would see this candle here as that 1 day time period. How it works is your opening price is where the candle starts, and your closing price is where the body of that candle ends. So if you start at 10 and you finish at 8, it's going to look like this. If you go the other way, it looks the other way. But what's interesting about this is if that price goes above or below the open or close price throughout the day, it appears as this line on the top or the bottom. So if we start at $10 and we go up to 15, we go down to 5, and we finish at 12, you're going to see a body of a candle that looks like this, and you'll see a long wick on the top and a long one wick on the bottom. And what that does is it shows you the entire price movement throughout the day, but where it opened and closed at. So a really good example of this and the bullish and bearish concept is the Apple chart. So this is really nice here. We can look at this Apple stock price right here. It started at around $150 and it finished at $300. We're looking at a time period of January 2019 to January 2020, so a 1 year time period. And this stock has done phenomenally well. It's up almost 100%. We've got a clear trajectory where the stock is going from the bottom left to the upper right. So this is a 100% bullish stock. We're in a bullish market when we look at this. This is completely bullish. So we use those terms to just identify whether the stock is going up or down and talk about the market in general. And this is the perfect example of a bullish stock. We can also see all of the candlesticks inside of here. So when we look at June right here, we can see that it opened around that 170 mark, it closed around the 180 mark, and we've got a candlestick on the top and a candlestick on the bottom. So we know that that price went all the way down and went all the way up, and it closed right in that middle section there somewhere. Now what's great about this chart is it also highlights it between white and red. So when we look at these red little candle bars, what that means is that the closing price of today was lower than the closing price of yesterday. It means that the stock went down on this day. When we look at the white candles right here, it means that the opening price, this line right here, or sorry, the closing price, this line right here, was higher than the closing price of yesterday, which would have been this one here. So when we see a white candle, it's usually a little bit better. It means the stock went up. When we see a red candle, it means the stock went down on that day compared to the day before. Here's a great example of it right here. So the stock opened right here at the 210 mark, and it closed right here at the almost 200 mark, which was lower than the closing of the day before. Therefore, that candle is red. And so this helps you see that, wow, Apple in 2019 was almost all white. They're in a clear bullish direction, and this company did phenomenally well this year. So really good to see, really great representation of the candlesticks as well as a bullish market. So where we go. So a couple more things for technical analysis that I just want to cover. A couple things that we just got to say. So technical analysis, it can be used over any time period, all the way down to 1 minute. So when we looked at those candlesticks, those were representative of 1 day each. However, you can change the time period on any of these charts, and you can look at all of these stocks all the way down to a 1 minute time period. So you could be looking at a stock as it's live trading, and that candle is going to be going up and down with the actual price of it. You can also extend it out over a long period of time. You could look at Apple over the last 30 years and turn every candle into 1 month. The same rules, patterns, and everything applies. So it's the exact same techniques, it's the exact same systems, the exact same methodology. However, it just allows you to give a very short time frame or a very large time frame and still get all of that information in between. Now, these rules and these methodologies that I'm going to talk about and all these skills that we're going to learn over the next couple lessons here, in technical analysis can be applied to any stock, any currency pair, and any commodity. They can also be applied to a lesser extent to index funds and large groups of companies. But the idea here is you're looking for trends, you're looking for patterns, and you're looking for different things in these charts that you can use to signal either a buy or a sell. Now, the big thing here is it's never going to be perfect. There's never one pattern that always works. There's never one strategy that always works. And if your company releases terrible financials right as you're setting up for a perfect trade because the charts look good, you're going to be deeply disappointed. So you need to be aware of all these different situations, because anything I teach you here on the charts is never going to be perfect, but it is going to be a signal, an indicator, or a nudge that says this is a good buy or this is a good sell. So we got lots more to come in the next few videos. We're going to dive into technical analysis pretty deeply. Please stay tuned, and we'll see you there.